Let's talk markets ahead of next week's earnings parade. Jay Jacobs is Senior Vice President of Research and Strategy at Global X Funds, and CNBC Senior Markets Commentator Mike Santoli. Let me start with you, Mike, because this would be the third day of pretty big gains on a skinny deal. Is there anything left after the deal's announced?
Yeah, that'll be the test. I mean, look, I think we're kind of just retaking the ground we lost. We keep handing back the same few percent. We ended September with the S&P just over 3,000. This rally this morning would get us within sight of that again. So I don't think it's irrational for the market to say if we can just lift the threat of imminent escalation in the trade war. I don't think the details matter a lot. They matter a lot for determining whether this was a good tack to go on in terms of economic policy. They don't matter that much for the market. So I think a lot else is going on, by the way, though. I mean, yields up significantly yesterday around the world. And I think that that's sort of the pendulum swinging in that direction suggests that maybe we got overdone in terms of anticipating a bad economic result. So the trade war would be coming just in time for seasonal effects to start getting good. Sentiment is very subdued right now. And so it makes sense to me that the market is leaning in the direction of finding an excuse to rally.
So, Jay, Global X Funds, is this like the X Games? Is this like gnarly, like radical investing or something?
Not quite.
No,
as
it's not. Not. It's just high risk. No,
We're looking around the world at investment opportunities.
Okay, that's where the X comes. Okay, and same question to you. Is there something left for bulls based on China and a successful, even though maybe not what everyone wants, but some type of resolution, no more tariffs, something like that?
I mean, every day we see these two heavyweight forces duking it out in the markets. We see kind of the Fed and central bank policy trying to support the markets, and we see the trade wars and, sometimes negative, sometimes positive news as the other force. And, what we're seeing from our clients is people are really losing patience with this kind of volatility. We've seen down weeks. This is an up week, but people are just starting to see more risk in the system, and I think are really starting to lose faith that any sort of trade deal is going to have a sustained.
What does that translate into the calls that you're getting then? That they want cash?
People are pulling back. Yeah, they're getting very defensive. We see a lot of people looking for yield from any source because that's a way to get return in a flat or volatile market. But people are getting very.
Do you have smart clients? Historically, what's it mean if your clients get frightened? Is it a wall of worry signal, or is it time to pay attention?
I think this can be worrisome for the longer term, right? If people are selling
stocks. Because your clients are so smart, because that's why they're dealing with you.
Well,
I mean, normally consensus opinion. I don't. I mean, there's no complacency, is there, Santoli?
There's not complacency, but I think we're at a phase though where it seems very rational to get more defensive.
Right.
I mean, there's all these inputs
that ever works.
It works when the big one hits. It works when you actually get a recession. It works when the leveraged loan market right now is acting kind of squirrely. And if that's saying something beyond just people are getting defensive, then it does. But in general, to your point, Joe, I agree. The fact that people are very risk averse right now, or somewhat risk averse and cautious, is probably a net positive because you have greater room to react to less disappointing news than you have vulnerability to things not going well.
So if you had to guess, if we ever broke out of this trading range, is it going to be the upside or the downside? What comes first?
I think it's more likely an attempt at breaking it to the upside. At this, first of all, we're only 3% away.
We just broke to the upside with Jay's comments. We're up 320 now, Jay, because your clients are selling.
The other thing about the earnings season, though, I would point out, it seems somewhat similar in shape to the prior two earnings seasons, which radically cutting back estimates going into the reporting season, and then better than expected, but not great. And what you saw in April and in July, which were the other 2 months that equate to the post quarter end, were pretty good months for the stock market because you just had relief. It wasn't that there was any great story.
Nobody told us anything we weren't already.
That's kind of where we were.